Hey guys, so if you've been listening to me for any length of time, I always say that banks lead the markets when it comes to our investing, period, and on charts, big time. That's why every morning I'm out there, I'm checking XLF, which is the S&P of all the S&P ETF of all the big banks. Typically, when big funds start funneling their money into the banks, is when markets start to move. So we can always look at XLF and kind of see which direction markets are going. And today is a perfect example of what happened on a 15-minute chart with the market being up basically all morning, with the exception of the NASDAQ, which wasn't down 3% at any point today except for really the end of the day, I think. And we saw a big run up in the banks, and then we saw them pull back on us, even though they finished positive for the day and pretty well positive. But Bank of America's, they're pretty much one of the biggest out there. They're one of the big four with Goldman Sachs, Wells Fargo, Citigroup. I think those are pretty much my big four. So JP Morgan, of course. Nothing that I'm really seeing. Of course, we had our big talks yesterday with the Chairman Powell. Bank of America is very big on giving home loans and whatnot. So this is what we're going to look for today. And I can't say that I love trading banks just because they don't move very much. This is something that I really like to get in. Banks were great back in the day when charts always had 3 cycles back in the day. Let me draw it for you. Let me find some blank screen here. Okay, if this blue box is my chart and we have our candles and everything, this is what a bank trend used to look like back in the day. You would have 3 big moves. You'd have the move to the upside that would happen in January through whatever. You'd have a big fall. You go back up, you'd have a big fall, and you go back up, and then you'd have a big fall. And so you could always pick, say, 5 stocks, go long, go short, go long, go short, go long, go short. That was the great thing about stocks like Bank of America, stocks like AT&T, BP, those kind of ones that didn't move very much. You always had the opportunity to just trade them, and you could get into them for multiple months at a time, collect a nice dividend while you're in them, even though that's not what we're here for. But it was just a great benefit of doing that. Now, it's much more difficult. So let's see what we have from Bank of America from a charting perspective. Of course, we're going to start long term. And the reason that I'm zoomed out this far is because we can see that at one point, Bank of America was a 50% rule stock. You see that it had some trouble breaking out through that 50% area a couple of times, and then it finally did it. So the point is, these stocks, 50% rule stocks do break out. And of course, this is everything that's happened since the pandemic. And once again, banks lead markets. Wherever the banks go, the market goes. So that's exactly what you're seeing. Let me pull up S&P. Yeah, it has the exact same track as the S&P. So this red line is the S&P, and you can see that the banks were doing that. They were just running right with the S&P. So banks and markets pretty much flow together. So let's see what we can do with it right now. I see that we're having a big day. Do we have a power stock on hand? Kind of. Yeah, I guess we do. We have Nah, I wouldn't consider this a power stock, only because we kind of just made a sweet spot reversal here and then just kind of went sideways on top. So I wouldn't really consider this a power stock. So what can we do on these charts right now? We had a nice day. We are making new highs. We are in that overbought area. So if we do anything with this, of course, remember, anytime we're in this overbought area and overbought is over 80%, that's when we need to pump the brakes, put stop losses on there. Because remember, what we're doing with charting is we want to create the highest probability of making money and keeping that money in our pocket. When you're in this overbought range, it's not that you can't make money. It's that the likelihood of the stock price continuing to go up becomes lower. So when we do have profits, that's when we want to keep that money in our pocket and not give it away. So all we have to do with that is just play a stop loss, and I usually recommend a 4 to 5% stop loss. So today we had a nice run up in the price, and then it pulled back on us. Coincidentally, the market did the same thing. We had a nice day we didn't have a nice day. We had a pretty normal day in the market, and then all of a sudden, the market started pulling back, the banks started pulling back together, and that's what happens. So just incredibly, if you look over here at our daily chart, you can see that we pulled back and closed literally right at resistance. The price closed at 38.97. Our resistance was at 38.98. So resistance is a very powerful thing, as you can see right there. So what would I tell you guys to do in this situation if you wanted to do something with Bank of America or something that looked like this? Because remember, I'm just teaching you guys. I'm not telling you that you should go in and buy Bank of America because we're not live right now. I mean, we are, obviously this is a recorded video and it's 4:35 in the afternoon. The markets are closed. So what I would tell you to do in this situation is if you had a candle like this, I need a green candlestick that takes out today's candle. This is what I would want to see tomorrow. I would want to see this tomorrow or Monday. I need some kind of big green engulfing candlestick that takes out today's candle. So that can happen. You can see how much great buying volume we've had the past couple weeks. And really good news, we're over all 4 of our major moving averages. So anytime you get banks that start coming down to moving averages, especially the 100-day moving average and the 200-day moving average, panic sets in. This is when you see the Fed start making moves and buying assets and buying bonds that are out there. They need to do something to they do not want banks to drop below their 100-day or 200-day moving average. If you look back at the history of the last 5 years, really anytime you start getting close to those moving averages, the plunger team comes to the rescue and starts pumping, buying futures, which bumps stock prices up. Anytime, just so when you're doing this, you need to pay attention to your moving averages. I always say that moving averages are very important. Moving averages are even more important when you start getting into banks. JP Morgan, Goldman, Citibank, Wells Fargo, Bank of America, anything like that, you got to pay attention to your moving averages. It is very, very, very important. So over here, let's stay over here. So we're over all 4 of those moving averages. Great. We're just stuck at this resistance right here. Let me pull out a little bit, just see where we're at. Yep, we're good. So if you wanted to do a swing on this, you are starting to roll over on your trend a little bit. No big deal. You're still over 80%, but you are rolling over. So just be conscious of that. You have just had some awesome buying volume coming in. What I would need is the exact same thing. I need a candlestick that breaks out, makes a new high, takes out today's candle. That's exactly what you need on a Bank of America. Also, keep a watch on your bid and ask. Very important to watch your bid and ask, especially on something like a bank, especially on something that's just under $40 a share. It's pretty inexpensive share to be up there around 6 cents. I would want this thing to be at about 1 cent bid and ask difference. The ask is what your market maker or specialist wants, depending on the indice, and the bid is what the buyer is willing to pay. Any discrepancy in the middle is the difference, and any discrepancy greater than 1 or 2 cents means that there's some kind of manipulation going on from the market maker or the specialist that's trying to get you to pay more for the stock than it's worth at that current moment. So everybody says, when I buy a stock, the stock price pulls back on me every single time. And it's like, okay, well, did you look at your bid and ask difference? Because if it was 5 to 20 cents, then yeah, it's going to pull back on you because you're not buying at the right time. So let's go over to a 15-minute chart and see what the deal is. This morning, we just had a great run. Here's where you can see the day finished. Dow finished down 0.5%, NASDAQ down 3%, S&P down 1.5%. The bank finished positive 2.61%, but you can see that we opened the morning right here. This is where we closed last night. So you did have that difference in a little gap up overnight, but you can see that you almost lost all of your gains for the entire day in the last, it started at noon. And started to pull back. So I don't know what was said today. Maybe something was from the Fed. I don't know. But a lot of people were concerned about the 10-year note. Maybe that was it. I don't really know. So let's trade. Let me show you. Remember, when I teach you this 15-minute chart stuff, all I'm doing is teaching you because obviously you cannot trade this with me. If you want to trade this with me, jump into the Bid and Ask Nation and we can day trade anything you want. You can ask me about it and I will walk you through it and hold your hand through it. There are 4 spots left right now. As of 4:40 on Thursday, 4 spots left. And I checked 30 minutes ago. Once that price is gone, the price is gone and it's going up. So get in there now, which is Friday morning, and get on it. All right. So most important thing if we want to go long on a 15-minute chart, we need to be over 80%, and we have to stay in this area for our entire trade. As soon as we drop below 80% on our stochastic, which is our percent K, this number right here, once that says anything under 80, you got to get out of your position. So this morning, you started over 80%, you hovered around a little bit till just about after 12. With that, you had great engulfing candlesticks going up all morning, and you could have just, man, day traders definitely crushed it today. You had great volume throughout the morning. Then at this point, let's say 12:07 for discussion purposes. You drop below this 80% area. That's when you sell and take your profits. So everybody says, when I'm trading on the 15-minute chart, when do I take my profits? Take your profits as soon as that number drops under 80%. That number drops into the 70s, take your profits. And you can see right when this thing dropped below 80%, you had candlestick that turned red and dropped down. So you started getting selling volume. You had a little bit of a bump back, but then the day just started to go on. And you could see how quickly this thing transitioned down. So any good day trader that is following Bank of America could have went long on this thing today and then made money coming all the way back down. Because right when you get under 20% down here, so the sweets, I always talk about the sweet spot on my weekly long-term chart and my daily chart. You want to be between 32 and 80%. That's where you make the most money. When you're day trading, it's kind of the opposite. You want to be between 80 and 100 to go long, and between 0 and 20 to go short, and you have to stay there. So you can see that once we drop below 20%, we just kept going sideways under here just pretty much the rest of the day until maybe the last few minutes of the day. And you can see you just had engulfing candlesticks coming all the way down, engulfing, and you could have literally made money going all the way up and then made money coming back, going short all the way down. You had pretty okay selling volume throughout the day, and most importantly, you're under 20%. So when you take your profits, right when you pop over 20%, say you start getting into the 21, 25 area over here, exit your position, boom, you just made money going both ways. So that is how you can make money going up and down. And this is a great example of how you do that on a daily basis. If you pick a basket of stocks that do this frequently, that do this kind of movement each and every day up and down, you can do very well for yourself. So I just want to recap for you. Let's say, what are we going to do here? We are going to use a stop loss because we're over 80%. And we're going to wait for an engulfing candlestick like that to take out today's candle. We want to take out that high. Over here, we had good volume coming in. I'm glad that we're over all 4 of our major moving averages. I'm not too thrilled about this stochastic rolling over. But if we can get some kind of engulfing candlestick like that tomorrow, taking out today's high, almost the same thing as over here, then you can do something with it. Just make sure your bid and ask difference is 1 cent. Next, over here on the 15, remember, over 80%, under 20%. As long as you're in that area, over 80 and under 20, you can make money going long and short respectively. Just add on engulfing candlesticks going in either direction. So that's all I got for you on Bank of America. If you guys like this, if it resonates with you, join the Bid and Ask Nation. 4 spots left, maybe less by the time you're going to be watching this, but you can come in there. I make videos all day. I answer all your questions. And just remember that you are going to get all of the Everything Money software for free. Paul and I were making this software for ourselves to invest our family office money. And we came up with we both taught at our high schools that we graduated from for free. And we said, how can we reach more people? That's when we started going into this YouTube avenue, and this is kind of how we're doing it now. So that is, you get everything, you get all of our software for free that we are going to use. That's exactly it. You're going to get momentum, 8 pillars, real estate calculator, etc. So if you like it, that's jump in the Patreon, Link is in the description below. Like and subscribe to this video. Share it with all your friends. See ya.